Hi everybody, welcome to another update on Stock Screener. Today I bought Monument Mining and you can see my buy here because I saw they had actually very good results. The financials were good and let's talk about that. I think there is more upside in the coming year. So these are the financials. Good balance sheet, still a good balance sheet. 23 million in current assets, more than the total liabilities. So positive working capital. A lot of working capital, 10 million. So when you compare this to other gold miners, they typically have a lot of liabilities and not a lot of current assets. This one has a pretty good balance sheet. And when you calculate in also the exploration and properties from Australia, for example, that's 100 million. So equity is at 100 million. Market cap is only at 30 million US dollars. So very cheap. It's trading at 1/3 of book value. Amazing, right? Now let's take a look at the earnings. So they sold only 4,600 gold, but they produced 7,000 and they were in ramp up phase. So I expect this to go much higher. If you do this times 4, it's around 30,000. I think it can go to 40,000 once they have full production. Maybe in the next quarter, we will see a full production capacity, and then this will be going to 40,000 per year. Okay, this is per quarter. Now, I did an AISC calculation by myself to check what it was. So here you have it. 3.9 million, that's this. Production costs, 37,000 operating expenses, 53,000 accretion, and then we have the 441 corporate expenses. I didn't take into depreciation. I always don't take this in because that's not really a cost. So, and the other things, just foreign exchange gain loss, I don't take in that as well. So that's the cost here. And AISC is this cost divided by the gold sold. So that's 962. And that's exactly the amount that that we see on their news release. It was around 957 all in cost. Okay, so that is looking very good. A low cost producer and ramping up production. I tried to reconstruct how the operations are going. So recovery was very low last year and it has improved now to 70%, hoping it will go higher to 80%. So that's looking good. The mill grade was lower last quarter, but it has improved now to 1.8 grams per ton. So grades are also improving. Transition ore is going to full ore, and AISC is nicely below 1,000. Production ounces are going up, and I think this will keep on going up for the next quarter because this was still a ramp up phase. They're going to improve the production. They have to fix some issues and the next quarter will be even better. here as well. Ore processed is at design capacity now, 90% capacity, and production is also following, with more to come. Costs were very high, now it is going down, so margins are improving. You can see that here the margins are going up. So looking very good. I still think this can go to 40,000 production. Currently gold price 2030, next year probably higher. Capex, I don't know what they are going to do with the BIOX still, but let's say we don't have BIOX Capex, then we are talking about net income around 15,000, 13,000 with an enterprise value currently of 25 million, so 2 times enterprise value. With BIOX, yeah, then we do have some costs, cash flow going down, but in the future they will have a BIOX business, of course. Okay, so looks very good. Add Murchison to that, and you have a very cheap company. On the leverage side, I do have this nice chart. And leverage is one of the best. 7.5 times leverage currently. And this is based on 40,000 production with this tiny market cap of 28 million. So 28 million company with 40,000 production. That's extremely leveraged because that production is very high compared to the market cap. Low capex, good AISC, so good margins. Yeah, it is producing a concentrate which only gives 80% around that level. But okay, the gold price is now high enough to be profitable. So break evens take into account that concentrate payability is around 1500, and now we are at 2000. So plenty of margin. And if gold goes higher, you can see that there is a lot of upsides from 30 million market cap. It could go to 60 million, 80 million. So that's a double. So I expect upside, probably 50% upside currently, but with a higher gold price, it could double easily. We don't know yet what Murchison is going to do. That could even give more upside. So yeah, I have bought back in, seeing 2 quarters of good AISC numbers. And yeah, let's see how they will do the next quarter. Let's also look at our overview. So here you see all the gold miners that I follow with the highest EV to free cash flow here, which I will never buy. And these ones are the cheapest ones with low EV to free cash flow. And as you can see, the leverage is typically higher for these smaller companies. Monument Mining has one of the highest leverage at 7.6 leverage to gold. So meaning if gold goes up 10%, Monument Mining's valuation will go up 70%, 76%. And it's very cheap. That's 2.2 EV to free cash flow. So you want to buy some of these and with high leverage. For example, Metals Exploration is a good one. Soma Gold is a good one. Step Gold is a good one, but this is not in production yet. But I will buy this maybe next year, end of next year. Cerrado Gold also not in production yet, not financed, no permits. But this one has a lot of upside if they can get to production. That's in maybe 2 years. So choose one of these. Artemis Gold doesn't have a lot of leverage. Mako Mining, also cheap one, but leverage is a bit lower. That's 3.3 leverage. But I do own this one because it's a very low cost. But we have more. Argonaut, very high leverage. One of the bigger companies. Also good one. Yeah, the Oceana Gold in the Peter Schiff Gold Fund. Also cheap. And these ones I would avoid. So that was the video. I think there is a lot of potential for this to move higher. The trend is looking good. So gold is also moving up, is breaking out. I think it can go to 2,200 easily. So 10% upside, and you know Monument Mining would go up 70% if gold goes up 10%. And I'll see you in the next video. Bye.